Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Nila Infrastructures Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good morning, everyone, and a warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of Nila Infrastructures Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the second quarter of financial year 2022. Before we begin, I'd like to mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making investment decisions. The purpose of today's earnings con call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and give it to them for opening remarks. We have with us Mr. Deep Vadodria, Chief Operating Officer, Mr. Prashant Sarkhedi, Chief Financial Officer, and Mr. Himanshu Bhavishi, Group President. Now I request Mr. Deep Vadodria to give his opening remarks. Thank you, and over to you, sir.
Good morning, friends. I welcome you all to earnings call for the second quarter and half year of the financial year ending 2022. I wish you all enjoy the very best of festive season and best wishes for the healthy and happy prosperous new year. The analyst presentation was uploaded on the stock exchanges and our website yesterday. I hope you had a chance to take a quick look at the numbers. As usual, instead of going through the entire presentation, we will try to summarize the key highlights for the quarter, followed by the Q&A session. The global economic outlook remains fairly positive, with respective governments extending financial support and central banks offering monetary support. Q2 FY22 has been a comeback quarter for India. While the second wave of COVID was abated faster than expected, the macroeconomic indicators denote that the disruption it created was leaner than it was first thought. India has already completed more than 1 billion vaccinations, and fresh cases are also reducing. With a near normal monsoon, the green shoots are already visible in the economy from the latter half of Q2 FY22. And the recent festive season gave a major fillip. However, the supply side inflation challenges continue to remain a source of worry. During Q2 FY22, we've received a significant increment in a particular order from AMC that provides a promising revenue visibility for the next couple of years. With the remote risk of the third wave, we envisage a very busy second half of FY22 in terms of operation. Another scenario, the company continues to focus on profitable execution of its large order book, leverage strong momentum in affordable housing, cost optimization measures, release of funds through improved working capital management, and a phased divestment of non-core assets. We've been striking a balance between profitable growth and capital employed, with the return ratios being pursued rigorously irrespective of the macroeconomic volatility. The company is confident of building on current business momentum and is committed to creation of sustainable returns for all its stakeholders. Now, coming to our order book. At September 30, 2021, the company has confirmed and practically executed an executable order book of 6,999 million rupees. In line with the ethos of good corporate governance, ethical practices, fairness, and transparency, the confirmed unexecuted order book is prudently realigned to depict the factual revenue potential. The book-to-bill ratio is not comparable at this point in time. The average execution cycle of this order book is around 27 to 28 months. Very briefly, I will now comment on the commitment of each of the business segments before we move on. The company's order book is in line with its focus of core competence of affordable housing, with 91% of the orders, 6,369.5 million, while high margin PPP is the major tributary with 76% of the order, 5,340.6 million rupees. Geographically, the state of Gujarat accounts for 85% of the orders, which is 5,977.6 million rupees. And principal-wise, government entities account for 91% of the orders, that's 6,369.5 million rupees. Ahmedabad Municipal Corporation and Government of Rajasthan are still the largest government clients. The other orders mainly include orders from companies, associates, JV, subsidiaries, related parties. These there have been an impressive new order announcement done to the macro level during the quarter. Even tendering activities, even tendering activities happened at a brisk pace. However, we did witness delays in awards of finalization. Overall, the company is executing construction of 8,628 units of affordable housing, while it already has satisfactorily delivered 7,517 units. With this, I now invite Mr. Sarkhedi, our CFO, to discuss the key financial highlights for the period under review.
Thank you, Mr. Vadodria, and good morning, friends. I quickly take you through the financial and operational highlights for the second quarter FY22. In terms of the standalone performance, first quarterly, during the quarter 2 FY22, the total revenue of the company rupees 280 million, that is higher by 21.5 million, to quarter 2 FY21, 258.7 million, while it was rupees 231 million during the quarter 1 FY22. Profitability at EBITDA level is 16.3 million as compared to 21.4 million quarter 1 FY22. The company has booked a profit of rupees 3.2 million, that is higher by 0.8 million compared to quarter 1 FY22, rupees 2.4 million. Half yearly, during first half of FY22, the total revenue of the company 511.3 million, that is higher by 162 million rupees to quarter 1 FY21, that is rupees 349.20 million. Profitability at EBITDA level has also been restated to the large extent rupees 37.6 million, that is higher by 75.6 million to half year FY21, that is negative by 38 million. The company has booked a profit of rupees 5.5 million, that is higher by 63.2 million compared to H1 FY21, that is 57.7 million negative. Coming to the revenues, the turnover of the company is increased, however, followed with the calibrated execution approach in line with the cash flows during the quarter. To some extent, we suffered the execution front due to the supply of the bottlenecks of the overseas, which impacted the project execution progress. Moving on to EBITDA margin, the profitability at EBITDA level is sustainably positive, mainly due to the lower base of the first half FY21, which was restated due to the cessation of the income, while overheads were being incurred. The project or operation cost and the other costs have increased with initiation of the new project at site. The depreciation and amortization expenses charged to the profit and loss account has increased corresponding to the increase in the fixed asset. While the bank guarantee and commission and processing charges contribute to increase in the finance cost is absolute number, the percentage of the finance cost to the turnover has reduced mainly due to the availment of the working capital term loan under ECLGS 2.0, which subsidized a restricted rate of interest. Moving to the PAT, the overall increment in the income has increased the profit before tax, which has also spilled over the PAT level. Moving to the balance sheet, the net worth of the company has increased corresponding to the PAT on the account of flowback of profit. The total debt of the company has reduced by 82.9 million. The company account is standard with all the lenders. None of the bank guarantees submitted by the company has ever been invoked by the principal or client. In terms of the consolidated performance, quarterly, during the quarter 2 FY22, the total consolidated revenue is rupees 276 million rupees, that is higher by 18.7 million rupees compared to quarter 2 FY21, rupees 257.2 million, while it was 169.2 million during the quarter 1 FY22. Profitability at EBITDA level is higher by 16.9 million as compared to 19 million of quarter 1 FY22. The profit is 5 million negative, higher by 1 million compared to the quarter 1 FY22 6 million negative. Half yearly. Now coming to the half yearly results. During first half FY22, the total consolidated revenue is 445.2 million, that is higher by 100 million compared to first half of FY21, rupees 345 million. Profitability at EBITDA level has also been restated to a large extent at rupees 36 million, that is higher by 73.7 million compared to first half FY21, that is 37.8 million negative. The profit is rupees 11 million negative, that is higher by 58 million compared to first half FY21, 69 million negative. I now open the floor for the question and answers that may require the first further clarification. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddhisha, an individual investor. Please go ahead.
Good morning, sir, and congratulations for your results. So my first question is that your EBITDA margins have come down this quarter. So is this because of the increase in the commodity prices like steel and cement, or is it due to some other reason? And also with these prices going up, what is the outlook on the margins in the coming quarter? And what is the company doing to mitigate this risk, as I assume most of your contracts would be fixed price contracts?
So answering your first question, the drop in the EBITDA is largely because of two major reasons. One is, of course, because of the commodity prices, which is hitting everybody in the sector pretty much because it's not accounted for the sudden increase in prices because of logistical issues and also commodity prices across board skying up. And the other part, as Sam briefly explained in his brief, is a lot of our projects are in initiation stage, and in the PPP projects, the initiation costs for the projects are a little high, which takes away some of our working capital pretty much upfront. So those are the two major reasons why the EBITDA is looking a little lower on this specific quarter. Going forward, yes, it is a point of concern. However, we feel that the prices have started easing down a little, starting with coal and a couple of other places. So we are seeing some movement on the prices. However, these are fixed price contracts, so they are going to affect us. Luckily, we made these transitions many quarters ago before the pandemic. So most of our order book, as stated in the opening statements, are coming in from PPP contracts, which are much higher profitability contracts compared to the EPC ones. And definitely, I cannot negate the impact of the rising costs, and they do concern us. But we somehow are in a comfortable position because all these projects, majority of the projects that we are starting out are all PPP projects which have pretty good profitability. However, the profitability, if the prices don't ease off, is going to affect us because these are fixed price contracts. But we are pretty hopeful that all of these commodities have been cycling over the nature and over the span of the execution, which is 27-28 months average for all the projects. It will average out to not affect us as much as it potentially would in the current state of prices.
Okay, that was very helpful. I just have one follow-up question. That could you discuss a bit about your order book, and has there been any win or any kind of new project in your pipeline?
So there are new projects in pipeline, but as stated in the opening statement, one of our projects has been substantially revised to a much higher project, which obviously has been updated on the website. The details of which you can one of the amendments of the order we have uploaded on the website, and it's also on the exchanges. And that is a substantial revision from the current order, and that really has increased the order book amount substantially. And as stated, we've started bidding for the new projects. The bids are in brisk phase now, so we're hoping that this quarter maybe few few of the orders could get materialized on the new front.
Okay, sure, I'll look into it. And one final question, that do you expect the execution to pick up in the second half? And if so, what kind of top line and bottom line growth do you expect in FY22 versus what was there in FY21?
Historically and even overall on the macro front, and also COVID situation being much better, second half of the year has been pretty good for all of us in infra space in terms of execution, and it's the same with us. So we are very hopeful that the second half of the year is going to be much better than second year. However, in terms of giving you the exact numbers, we don't give out guidances, but yes, FY21 was obviously a very compromised year because of COVID, and this year hopefully things are going to be on the track. They look to be on track. The manpower situation is pretty good, and we are anticipating a good execution to come in the second half of the quarter, and we will see substantial increase in terms of second half of FY21, of course.
Okay, great. Thank you very much. All the best.
Thank you. Reminder to the participants, to ask a question, please press star and 1. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, to ask a question, you may press star and 1 now. The next question is from the line of Bikram Rana, an individual investor. Please go ahead.
Hi, congratulations on the good set of numbers and the revival coming from the COVID second wave. I have a couple of questions in mind. One is that when I look at the order book now, on the civic urban infra side, it has actually come down. So any particular reason that the focus is going to be on affordable housing, or you could see more such orders of civic urban infra also coming in?
Hi. So there was a conscious decision a few quarters back that we took to change a lot of our orders and focus on PPP contracts. If you see in the civic urban space also, we are executing 2 large orders which are on PPP, which are bus ports in Modasa and Amreli. However, not a lot of PPP orders coming out in terms of civic urban infrastructure space, but we are closely eyeing the space which is pretty hot at this point of time, and luckily we were able to get into that space, and now we have the credentials to bid for a lot of healthcare facilities which the government is coming up with across the country based on whatever happened with COVID. Obviously, a lot of budgets are being allocated by various state governments to medical and education, and that's where we did not have the criteria before we executed the Badme Medical College. So it gives us the ability now to go out and bid for these orders. And going forward, obviously, we are going to focus on civic urban infrastructure. However, affordable housing has always remained our forte, and that's going to be the major contributor to the revenues. But we will be a little bit picky in terms of what are the orders that we are taking, because profitability is one of our biggest criteria. As we've seen, because we were proactive in terms of that, we have taken lesser hit than somebody who is sitting on a very large fixed price contract PPP order, because the commodity prices have been through the roof. So right. We're pretty happy that even though the civic urban infrastructure order book is a little lower than what we would have expected, but we focused on what we really wanted, which is profitability, and that's what we will continue to focus on.
Got it. No, that makes sense, right? In testing times, it's better to be safer. And secondly, on the other side of it, on the affordable housing, right? I see most of our projects have been in the region of Rajasthan and Gujarat, where we have got the comfort level now. Are there any plans to expand to other geographies as well in the near future or near term?
Not very soon. We've looked at other states, but as I stated, we usually look at various counts in terms of political stability, a lot of other factors. See, there are states which are completely different from what we are used to dealing with, and there are states which are similar. So we've actively pursued states like MP and a lot of other states. But however, the sort of opportunity that is there in Gujarat and Rajasthan, where we are very, very comfortable, remains very high, and even the opportunities that are going to come in the future, the prospective order book is looking very high. So, however, we are open to looking at other geographies, but it's not something that is going to be a key factor for us, because we don't have to prove scalability in infrastructure when it comes to geographies. We are going to continue to focus where our comfort zone is, while looking at maybe new opportunities coming up in other states. We don't discount that for sure.
Got it. No, that makes sense. And what will be the bid order pipeline on both sides of it, on the civic urban and the affordable housing side of it? And what is the hit ratio we see, usually in these kind? Because right now, there's a good traction coming in, as you said, right? The government is also focusing on infrastructure going ahead. Mm-hmm. So just want to understand what the roadmap would be for the next 2 to 3 years.
So the roadmap will be to stick to our basics, which we have historically. If you look at it, our hit ratio has been very, very good. We don't go out and bid for projects just for the sake of bidding. So we've been very selective with our bidding process. However, the bid pipeline was a little dry in the last quarter because people are just returning back to work. Civic urban authorities were also busy tackling COVID and all the other COVID-related pandemic responses that they were doing. They've just returned back to work in terms of doing their normal work in the last couple of months. So this quarter that we are in, and the next quarter is where we envisage a lot of new bids coming out, and that's where probably we are going to eye the bids that we are already focusing on, and hopefully stick to the kind of hit ratio that we have in the past.
No, makes sense. Good luck for the future. I think that's all by my side. Thank you.
Thank you. Participants, you may press star and 1 to ask a question now. The next question is from the line of Tanush Makwana, an individual investor. Please go ahead.
Hi, and congratulations on the good set of numbers and revival. I had a question that in the beginning you said there would be a balance between profitability and capital expenditure. Could you emphasize more, and how would you approach it in the coming quarters as well?
I am sorry, but you'll have to repeat the last part of the question because it just was cracking your voice on my device. I'm sorry.
So in the beginning, there was you wanted to create a good balance of profitability and expenditure, which was said in the beginning. So how would you approach it in the coming quarters, and could you emphasize more about it?
Yeah. So there are two elements to it. One is obviously the selection of orders, where I've clearly stated earlier on the call that consciously the focus has shifted on the higher profitability orders of PPP projects where the profitability is high. It's the area that we specialize in, our team specializes in. So we've been focusing on that where the profitability is higher, and the capital expenditure, however, skewed it is at the front, because at the front in these PPP orders, the working capital is a little more than any other project. But over the period of time, the profitability actually irons out that difference for us. So that is one is a conscious focus to select where we are going to work. And the other element is obviously optimization of costs through resources, because of the sort of experience that we have on the purchase. Obviously, that counts. That makes a big difference in times like these where costs are through the roof. So we're now with this sort of order book, we are sitting on a very large sort of consumption in terms of basic materials. We've been working with various suppliers in terms of planning the material resources, the cost negotiations, just to optimize a larger spirit and a larger quantity, because most of these projects that we are talking about are going to take off now in terms of it. So all of our consumption of raw materials, and large part of it is going to be consumed in the next coming quarters, which gives us the leverage on the suppliers in terms of negotiating terms and conditions with them. And however, as I said, thinking that whatever's happening on the commodity front is going to start cooling off, which it already has in a few of the commodities like coal and stuff.
Thank you.
Sorry to interrupt. Is this answers your question, Mr. Tanush?
Yes.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. Participants, you may press star and 1 to ask a question now. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Deepak Dadaria from Nila Infrastructures Limited for closing comments.
Thank you, friends, for having taken your time to attend this call. Going forward, as a pure play civic urban infrastructure company, we will continue on the growth path. We will look forward to having you with us on the next quarter's call. And in the meanwhile, our team and our IR team will be more than happy to assist you. Thank you again. Have a good day.
Thank you. On behalf of Nila Infrastructures Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.